The headline sounds insane, but the biggest crypto win of the decade is the fact that XRP, Bitcoin, and crypto are finally getting boring. That's not exactly something you would expect a crypto-based channel to state, but we're not talking about bear market boring like in the past. We're not talking about a lack of adoption or growth in the space. We're talking about a complete historic transition from the digital Wild West straight onto Wall Street's trading desks. And that's because in the end, we were right all along. Crypto has won. And so with it comes stability, which we are not used to in this space. Now, before we dive into any price action, we have to talk about the political shockwave hitting the market. The Trump administration has gone full send bullish, promising to sign a landmark market structure legislation before the year ends.
I'm also committed to signing landmark crypto market structure legislation this year to grow the industry. We're going to be growing it even more than people ever thought. It's a really hot industry.
Then we're talking about another major endorsement from one of the most important people in all of Washington, the Treasury Secretary Scott Bessent, declaring that the United States has officially entered the golden age of crypto. Heck, we even have the SEC chairman, Paul Atkins, stating all US markets will be on chain within 2 years. There's not a soul that is currently occupying a major seat as a regulator that is not pro crypto, and anytime they aren't, the Trump administration has done a good job of silencing their dissent against crypto. Now, many people are worried about what's coming next for crypto, that all of this positive news has come out and the price is currently struggling, but I will be unpacking the surprising VC funding report, which shows that huge capital raises are happening. They're just happening in fewer deals. In other words, we're seeing more of a consolidation of this institutional money and power, which is typically what happens in a mature market. And although it's probably not in the best interest of decentralization, at the end of the day, these types of moves are going to work really well for companies like Ripple. And as the big money moves in, the old political establishment is failing to keep up with this great technological shift, which is why they've been fighting this market structure bill for so long. They've even been trying to change key proponents of the Genius Act. These bankers are about to lose that battle when the market structure bill comes into legislation before year end. In other words, this is a massive power play by the crypto market and the Trump administration, which is going to dictate our portfolio's future. Now, speaking of your portfolio's future, if you're wanting to invest in the crypto market in a tax advantaged account like an IRA or a Roth IRA and have access to literally dozens of different cryptos, not only your majors, but things like Hyperliquid, SUI, XLM, major meme coins, World Liberty Financial, AI tokens, infrastructure tokens, then check out the link for I Trust Capital, where you can also roll over a 401k or start a new one that is completely self-managed with one of the best US-based teams on the planet. These guys have received tons of awards, have $16 billion in transactions and 200k plus accounts. They've been featured on Forbes, Barron, Bloomberg, and more. And if you have any questions, check out the link below and you can actually speak with one of their members on their team, which do not work on commission, which means their whole goal is literally just to answer your questions so you feel confident and comfortable starting an account with them. And as always, my friend, if you're feeling blessed and bullish, comment 777. And if you're going to be the wealthiest person in your family tree, smash the subscribe button. Hello and welcome back to the Bull Runners channel. If you're new here, my name is Paul. You can find me on Twitter or X at PauliDeFi, PaulieDeFi. The first thing I want to cover is the fact that we are essentially winning on all fronts. We were right. And if you've been invested in crypto or had any inkling of an idea surrounding the future of blockchain technology, Ripple, and their major win over US regulators in the last administration, the rate at which they would acquire companies and then work to integrate the XRPL into those ecosystems from a TradFi perspective, you were right. And now we have the full support of virtually all regulators at every single level, whether it's the SEC, whether it's the Treasury, whether it's the Trump administration, and anyone he appoints at these major agencies. Well, now we have another another recent post from Scott Bessent, who's really there not only to support crypto, but to make sure it doesn't go away, because if they have stablecoin issuers and stablecoins continue to grow in demand in terms of real world asset use cases and just another form of digital money that is transparent, those stablecoin issuers, a company like Ripple with RLUSD, which is continuing to grow, will be the largest holders of US treasuries and debt. So they need, in other words, the US dollar literally needs to see crypto win in order to maintain its dominance into the next decade. As he even stated, the US has entered the golden age of crypto. Under the President of the United States, we're exploring new possibilities in decentralized computing and digital payments to unlock the potential of blockchain technology. In other words, they are incentivizing companies to launch their protocols and work here, to hire here. And I'm willing to bet there's going to be tax benefits to doing so as well, considering they want that innovation onshore. Let's listen to what he states.
I'm grateful to be with you all here today. America is a frontier nation. Our people have always pushed boundaries in exploration, politics, science, and technology. To be American is to be constantly moving.
Then you even have Paul Atkins talking about asset tokenization and bringing everything on chain.
Tokenization is the idea of using then smart contracts or tokens on chain to be able to that represent, say, an underlying security. And so then that tokenized security is a security and would be subject to SEC rules by law. But the idea is that if it's on chain, on a blockchain, then there's much more transparency as to where it is. Right now, there's a bit of opacity as to who owns what and where the company usually doesn't even know where its who its shareholders are and where the shareholders reside, where the shares reside. So tokenization has the benefit of potentially having, instead of T+1 now trade date +1 for clearance and settlement, the prospect of maybe T0 now, depending on the instrument, and we have to think about netting and all sorts of other things with respect to some instruments. But in principle, the idea of on-chain delivery versus payment and receipt versus payment, DVP, RVP on-chain, is a prospect of de-risking the markets, making them much more transparent and then sure as far as clearance and settlement, because it's always that the gap between clearance and settlement and then delivery and payment is the real introduces risk into the system.
Do you expect this is where financial services is going? Are the major banks and the brokers out there today moving increasingly toward tokenization?
Oh, absolutely. And it's the way the world will be, here in maybe not even in 10 years, maybe even a lot less time, maybe a couple of years from now. So I think that all of this modernization of the markets, I think, is good. And the trouble that we've seen here over the past few years is that the SEC, unlike historically, it never was necessarily at the vanguard of pushing new innovations. It was always a little bit behind the market, of course. But here recently, it's been almost standing athwart the marketplace, and as it's as all these new innovations were coming about. So that's no more. We're actually embracing it, and I believe that we need to be embracing it to keep the United States at the forefront as far as cryptocurrencies and whatnot. There were really only 2 countries in the world here in the last few years that were working to make cryptocurrencies illegal, and that was Communist China and the U.S. through the SEC. So that's changed. It's a new day now, and so we want to embrace this new technology.
And so what he's essentially saying is that the entire world of finance will be on-chain and tokenized in the future. And we have a company like Ripple not only acquiring a bunch of TradFi companies and modernizing those systems with blockchain technology, we also have them offering tokenized assets on the XRP ledger. And they explain exactly how they can do that and why they can do it better than anyone else, because they truly have a world-class team and they've been extremely profitable, sitting at over a $40 billion valuation as a company now. In other words, institutions are going to want the best and the most trusted, who also have the right licenses in place, which Ripple has acquired over the last couple of years, as the XRP ledger technology has been used to power global payments, digital asset custody, and stablecoin issuance, with 3.3 billion plus transactions and over $1 trillion in value moved between counterparties. So they are truly proven, which is extra exciting because you have everyone on board in government. And now you even have Brad Garlinghouse, CEO of Ripple, stating that in less than 4 weeks, XRP is the fastest growing crypto spot ETF to reach $1 billion in assets under management since Ethereum in the United States, which is an indicator of a few different things. First, there's pent-up demand for regulated crypto products. Even having an old school company like Vanguard basically bend the knee and say we need to start offering crypto. And also, there is longevity, stability, and community, which has truly driven the demand for the XRP spot ETF, which are all underrated themes that matter to this new set of off-chain crypto holders. In other words, in this article, crypto is boring now because we won. As one person in this states that Carter isn't mourning, as he sees it, regulatory clarity, Wall Street adoption, and boring stability are proof that crypto won. The whole space has matured. What was once a technological risk fest is now a technological substrate adopted by the world's biggest firms. The new game isn't about skirting the law, it's about building products that actually generate value in clear daylight. And crypto is boring because TradFi's seriousness brings in real capital, real custody, and real infrastructure, which should turn into real profits for a lot of these crypto companies like Ripple, which explains why big money is no longer investing in a lot of different cryptos. They're essentially funneling their money into a few good deals that will actually survive in the case of a crypto market Armageddon or some sort of a black swan event. Money has to flow into companies that are actually profitable and being used. In other words, deal activity used to be pretty high in terms of venture capital flowing into the crypto space, funding all sorts of new cryptos and deals, and the crypto tokens that would be launched would pump hard. We're no longer seeing that, and this broader slowdown of capital entering the space is basically being concentrated into a small number of large raises by established companies. And so as in investigations, so in crypto and investing, follow the money. The money flows into the biggest and the best that are likely going to do well over the long term. As back in this last month at the Ripple Swell conference, Ripple did announce that they closed another $500 million in a strategic investment at a $40 billion valuation led by Fortress Investment Group and Citadel. So this is all loads of good news, but we still want to see it reflect in the price. As the entire crypto market's down, the stock market's been down for a little while. There's been a lot of uncertainty about what's going to happen with the Fed. And ultimately, I just think retail is kind of exhausted. A lot of people lost a lot of money over the last couple of months, especially thinking that the bottom was in when we only went in for lower lows. That said, in order for me to truly want to flip bullish, I need to see this stuff reflect in the price of XRP. You can see that in the past, back in May, right behind my head over here, this range of about 260 ended up being a resistance. When we broke out, it ended up being a support up to 270. So 260 to 270 are pretty strong ranges of support and resistance, which we saw yet again. Once we broke down below the range, this acted as a resistance yet again. We're putting in a series of lower lows and lower highs, which is a major textbook downtrend. And right now we are currently chilling in a very weird and tightening range, but ultimately XRP seems to be struggling to break above that 225 range, which again acts as a bit of a resistance. So that said, if we break below $2, it's likely we're going at least back down to about 160, which would be our major range of support. from the breakdown in April and yet again on the breakout in November of 2024. If we can get back above 224 to 225, it's likely we'll pump right back up to at least 250 and potentially even 270. And in these ranges, I would be bullish. In the current range, if we, let's say, break down at 220 again and come back below $2, that is very bearish. No amount of fundamentals or good news at this current moment is enough to push the price up, which leads me to believe that neither XRP or Bitcoin or any cryptos are going to buck the current trend until we get a major catalyst in the general or greater macro market. But even with the ETF demands and buying, it doesn't seem to be affecting the spot price much, which many people would argue, is that manipulation? Well, I'm not too sure, nor am I going to waste mental energy thinking about it. I'm just going to focus on the reality and the price that I can either buy or sell a token like XRP at. So again, where I'm going to be more bullish is if we can break above 224 to 225 and start coming back in this range at 270 right up here. Where I'm going to be more bearish is below $2. And I'm going to watch those ranges very closely and either long the market here on a bit of leverage or short the market here at $2 for a really good play. And this is not because I want to be an XRP hater or a bear. I would be a bull when the price looks good. I'm going to be bearish when the price looks like it wants to break down. In other words, I am truly agnostic when it comes to the price of an asset, no matter the amount of good news, because the price is reality. Now, some people might argue, well, you're not thinking long term. That's totally fine. But in the long term, if it continues to break down, I would love to buy lower lows and have more of that asset to invest in for my future. On the flip side, if I'm buying at the wrong time and it continues breaking down hard, well, then I'm just losing money and time in terms of what I can actually sell the asset for. So sometimes being patient and waiting for the right opportunity to enter is so important. And we also have to remember that institutions don't care if a market goes up or down because they make money on both sides. Amateurs only make money in bull markets when the price goes up. Professionals make money in all markets, which is why I think you really should practice strong risk management and also try your hand at something like this.
What if you could trade with $100,000 without ever risking any of your own capital? Well, I'm doing it right now, trading a 100K funded account with zero of my own money on the line. I just paid a one-time evaluation fee to take a trading test. That's it. Because everyone's been asking us, how do I get crypto loans? Or how do you leverage trade without risking any of your own capital? Well, that's exactly why we're leveraging Breakout, which is a crypto prop trading firm recently acquired by Kraken with over 10 million clients, 2.5 million funded accounts, and over $1.5 billion in revenue in 2024 alone. They will fund you up to $200,000 after passing one simple trading test. And you get to keep up to 90% of the profit, and you can withdraw in USDC 24/7 after passing the trading test through the link in the description of this video. Now, here's the problem that I've seen most people face. Let's say you're trading with $10,000 of your own money. That's your rent, that's your groceries, that's an emergency fund. And one bad trade or black swan event and poof, your account is completely blown. Rent's late, savings is wiped, and your family is stressed out. So you're not trading to win. Trading your own money is trading for survival, whereas trading with 100K of risk-free capital is freedom. In fact, if you only have $10,000, you should never be trading with all of that. Instead, if you took just 10%, which is $1,000, and you buy the 100K or the 200K breakout test, and you pass the test, well, you're going to be trading with six figures without depositing or risking any of your own money. This is what I'm doing right now. And if you fail the test, you only lose $1,000 instead of your $10,000 because you shouldn't even be trading with $10,000 of your own money in the first place if you can't pass a simple $1,000 trading test. And the best part is there's no limit on retries. So that $1,000 can give you 10 shots at a 100K account if you fail the first few. That's 10x better risk management. And that's how you prove you actually know what you're doing. And this is the smartest strategy that the best traders in the world use. That's OPM, other people's money. You pass the test, you trade Kraken's money, and you get to keep up to 90% of the profits. And you can withdraw USDC on demand 24/7. So I paid, I passed, and now I'm trading 100K, and it only cost me $1,000 rather than risking $100,000 of my own money. And now it's your turn. So do not buy the small test. You're here to scale your portfolio fast. So here's exactly what you need to do right now. I left a link in the description of this video, and when you click it and select the classic one-step 100K or 200K account test, you simply click start trading, and then you enter in the affiliate code 777 on your checkout to get the maximum discount on your 100K or 200K funded account. And make sure to check the add-on box for the 90% profit split. It's only $100 extra. It pays for itself in your first payout, and if you skip it, you're leaving 10% on the table forever, so it's well worth it. Then you simply pay for the test, you pass it, you have an unlimited time frame, and you get to keep up to 90% of the profits. And again, you can withdraw in USDC anytime that you want after you pass the test. That's it. Now, we do earn a small commission when you use our code 777, but it supports value-based videos like this, and it'll help you get the maximum discount on your 100K or 200K funded account test. So click the link in the description right now, take the test, and let's get you funded.
So go ahead and click that link for the breakout prop evaluation to get started today. And thank you so much for watching this video, my friend. If you learned something new, be sure to subscribe to the channel, and I will see you in the next video. Goodbye.